everyone, welcome to another exciting Mrs. B's video. So we are going to do practice exam 3 today. So we are zipping right along and just going to cover all kinds of cool things, chapters 7, 8, and 9. So hopefully you will grab a bag of popcorn, open your Excel spreadsheet, and do these problems along with me. Also would really encourage you to go ahead and do the practice exams. You're going to find different problems, so the more practice the better, because they're more difficult on the exam, and the more you have the structure set up and the more that you understand these problems, the easier it's going to be. So all right, let's just get started. So all right, so we have let's see, that looks pretty good. Calistoga Produce estimates bad debt expense at 0.4%, so that's 0.004. Okay. So actually I have an error right there, so let's fix it, because so many people get confused and just think that 0.40% is 4%, but it's not. It's 0.004. It's the difference between we'll get this going here. There we go. Okay, so the difference between on $100 is the difference between $4.40. Okay, so 0.004 is 40 cents, 0.04 is $4. Okay, all right, and so that's just a really common mistake I see students making, is not understanding how to correctly convert those decimals. So all right, so the company reported accounts receivable and allowance for uncollectible accounts at $4,800, so $480,000 and $1,500 respectively, $1,570 respectively. Okay, so we have accounts receivable at $480,000 and uncollectible is $1,570. All right, and on December 31st, the credit sales were $332,000. And collections were $307,000. So of these $332,000, we actually got cash in the door of $307,000. So what is it asking us to do? What is the accounts receivable for 2021? So we have beginning accounts receivable $480,000, right? And a credit sales, we're going to add credit sales. And then we're going to subtract cash collected, and then we're going to subtract write-offs, okay, here in year 2, okay? And so therefore, the ending accounts receivable is $530,000. But what if it wanted to know your bad debt expense? Because actually there's this problem in the, this exact problem asks you the accounts receivable, and it also asks you the bad debt expense. So the bad debt expense, we're going to take that so I can go 0.4%, or I can go 0.004, take that percent off. Anyway, all right, so that's just making things worse. So all right, so if I was just gonna go with, so I can go 0.004. I'm trying not to confuse you. Hopefully I'm not confusing you. So it could be 0.004, it could be 0.40%. Okay, that percent. So this is the decimals, this is with the percent. Okay, same number, just understand this is a percent, this is the decimals. All right, and so if I wanted to calculate bad debt expense, it would be 0.004 times 332,000 to get 1328. Pretty good write-off. So whatever their collection policy or credit policy is, somebody's doing a really good job, because that much money and to have that little write-off, that's pretty impressive. Having been collection queen before, those are beautiful numbers. All right, Allison purchased dresses from McGuire. So we have just the very random, so we're going to be flipping back and forth from bad debt to purchases and inventory. So let's see, Alice purchased dresses from McGuire. On July 17th, they received an invoice with a list price of $6,000. payment was 110 and 30. 1% if you paid within 10 days, net 30. Allison uses the net method to record your purchases, so she should record a purchase of $59.40. So debit, merchandise inventory, credit accounts payable for $59.40, assuming she's going to take it. And then if she doesn't take it, then she's going to have to write up that 1% as a discount lost. All right, which would go to merchandise inventory. Everything goes to merchandise inventory on the purchaser side, and then, but we do break them out to sales discounts and allowances on the seller side, because there can tend to be a lot of reindeer games played and a lot of frauds. So it's very important that that gets accounted for separately. With those contra accounts, meaning they have a balance not normal, like credit. So sales has a normal credit balance, so these sales discounts and returns and allowances would have debit balances. All right, let's move on. As of January 1st, 2018, Farley had a credit balance of $535,000. And so, I just tend to write everything down, and then I can make sense of it in some kind of form. So that is my process, okay? And then based on 3%, Farley's credit sales have been uncollectible. Okay, Farley wrote off $638,000 and had credit sales of $18,400,000. And so what amount should Farley report as allowance for uncollectible accounts? Okay, so what is the ending balance? So we have a beginning balance of $535,000. So our credit sales is, so we should have an allowance of $552,000, right? So if we did nothing else, we would just take that difference. Actually, yeah. So we would just need to take the difference between the 552 and the 535 and increase the allowance. But we also had this minor write-offs, $638,000. So if we take the beginning balance plus what should be in there plus what we ended up writing off for the year, we need to fund the allowance with another $449,000. So plus minus 449, that gets you 449. Okay. All right, and let's move on. Okay. The Faro Computing sold 5 computers, and they used the net method. So 210, 2% discount, and 30. So they're already going to record it at the 2% discount. So 11,300 times 98%, which is 1 minus 2%, gets it recorded at 11,074. Okay, but then the company does not take care of I think I'm missing some instructions. So this is to record the sale, and obviously I'm missing some instruction there. So number 2 is so if they pay in time, right? So we're going to go to the mailbox. There's going to be an envelope with a check for 11,074, and we're just going to clear accounts receivable. But if this was a phantom check and it didn't come, and it actually came on June the 5th, which is after the 10-day period, we're going to get cash for 11,300, the full amount, and we're going to we're not going to go back and gross up accounts receivable. So we're just going to write off the accounts receivable balance, and then we're going to put it to sales discount forfeited, okay? Which is a sales account. So it's not contra because it has a normal credit balance. All right. There we go. The balance in accounts receivable at the beginning of 2024 was $680. During 2024, 2,500 of credit sales were recorded. If the ending balance in accounts receivable is 240 and 200 in accounts receivable was written off during the year, the amount of cash collected from customers was, so beginning accounts receivable is 680, and we have credit sales of 2,500. So I had to back into this one, okay? And so we know write-offs are 200, and we know ending balance is 240. So I took 680 plus 2,500 minus 240 minus 200 to get cash collected of 2740. All right, there we go. The Burns Company first year operations, total credit sales of 176,000. I have over here, okay, and collections on the credit sales were 123,000, leaving us accounts receivable of 53,000. Okay, but wait, we're not done. Burns estimate bad debt loss of 1.5%. So 176 times 1.5% is 2640. Okay, by the year end, he'd written off $480 of specific accounts. So we have to take it to the allowance. So allowance for uncollectible accounts 480, and accounts receivable credit 400. So we're getting rid of the receivable and we're writing it off. Okay, and then we're to fund our this entry is to fund our allowance. So we're going to debit bad debt expense and credit the allowance. Okay, so and then it wants us to present the partial balance sheet. So we have accounts receivable total of 5250, 52,520. Where did I get that? Because right here we have accounts receivable of 53,000 minus the 480 gets us to 52,520. And then we're going to subtract the allowance for uncollectible, so which is the 2640 minus the 480 gets you to 2160, and when you subtract that from the 52,520, you have net receivables of 5360. All right, let's just keep having fun. All right, here we have a summary of Klugman's December accounts receivable aging. Okay, so an aging is we use this at the credit union actually, and so we would estimate that we've got 0 to 60 on average. So here we're going to pretend, okay, that we have a balance of 70,000, and on average we write off 0.5%. So again, this is about correctly identifying the correct decimals. Okay, so when I take 70% times 0.005 or 0.5%, I get $350. Okay, and then I tend to write off 1% of excuse me, the 61 to 90 day, and that gives me $270. sorry. All right, and the 90 to 120, we tend to write off 10% of that, so that's $400, and over 120 days, which I'm not really sure why we still have it on the books for over 120 days, but we do. Maybe it's a special account or a dispute, who knows, but we write off 50% of that. So and then we add all that together, and that's what we should fund our allowance with. Okay, so that's where we're going. So our estimated allowance should be $1,570, and then it says we have a balance of $1,500, and we wrote off $850. So we take $1,500, we wrote off $850, leaves us a balance of $650. So when we take $1,570 minus $650, we need to fund the balance with $920. So let me go ahead and highlight that. So and here's the entries. So to write off, allowance for uncollectible account $850, get rid of the accounts receivable with a credit $850, and then to fund the allowance, bad debt expense of $920, and allowance for uncollectible accounts credit $920. All right. Okay. All right. So let's keep moving on. So I didn't do a lot of ratios. Again, go back to your ratio sheet, and it just, they're very simple. And if you get it all set up in an Excel spreadsheet, they should just, if you get 5 of them, they should be like, I bet you could do all 5 in less than a minute if you had all of them set up. So so here we want the gross profit ratio. So we're going to take net sales, right, and then divide it by, we're going to take gross profit of 179 divided by our net sales of 307,300, and we get a gross profit percentage of 58%. All right, the Fulbright company uses the periodic inventory system. for its first year operations. So, so what I did is because there are several iterations of this particular problem. So this is an inventory problem. So sales for the year, so here we bought 42 units at $97, we bought 70 units at $79, we bought 174 units at $68. So sales for the year total 270 units, leaving 14 units available, right? So the first one wants to know what the ending inventory using the average cost method. So, so the way that I work this, if it asks you for cost of goods sold, that's right there, right? If they want a cost of goods sold, I guess I could label that better. All right, that would be cost of goods sold. Cost of goods sold. There we go. Put that over there. Or ending inventory. So to get the average, so I have a total of 268 units. Here's my extended cost of $21,436. And so when I take 268 and divided by, sorry, the other way around, 21,436 divided by 286, that gives me an average unit cost of $74.95. And when I multiply that by the 14 units remaining, then this is my ending inventory. All right, but what if winding? All right, see, don't type with butter on your fingers. There we go. All right, so what if they ask you to do it for FIFO? All right, so basically I just copied this all down. So there's 268 units for a total of 21,436. However, we have 14 units left. So FIFO, we start from the top and work our way down. So we're going to use all 42 of these units. We're going to use all 70 of these units, and we're going to use all but 14 of the 174. So that gives us 160. So if we extend everything out, 42 times 97 is 4,074. 70 times 79 is 5,030, and 160 times 68 is 10,880. So it gives me my cost of goods sold of 20,848. But my ending inventory, I have 14 left of this tranche here, so to speak, this batch of inventory, and at $68. So 14 times 68 gives me ending inventory of 952. But wait, there's more. See, at no extra charge, you get these bonuses here. So what if they wanted to do it LIFO? Then we're going to do it backwards. Okay, so we're going to start here. We're going to use all 174. Then we're going to use all 70. And then we've got 14 left. So we're going to take 42 minus 14 gives us 28. And then we're going to extend everything just like we did up here. So that's going to give us cost of goods sold of $20,078, or ending inventory would be 14 times the 97 of this batch that we still have left up here, and that would give us 1358 ending inventory. All right. A couple more. Well, no, we got several more problems. We've still got chapter 9 to do. So last one in chapter 7 and 8. All right. The Foxworthy Corporation uses periodic inventory system and the LIFO system cost method for one product. Beginning inventory is 44 units. 44,000 units consisted of the following. Okay, so we had 26,000 units. We purchased at $6, and 18,000 units we purchased at $7. So this is the way they worked it, but then this is the way I worked it. This is the way my brain works. I'm not sure how your brain works, but so I'm going to work it both ways. So during the inventory declined by, so basically we sold 20,200 units at a cost of $8. Okay, so what Connect is famous for is just netting things. Okay, so, or I guess it's the textbook authors. Okay, so we have liquidated units of 20,000. So basically they're taking the difference between the $7 and $8 on the 18,000, so that's 18,000 units, and then they're taking the $2 difference, $8 times $6, or minus $6 is $2, times the 2,200 units we still need to get to the 20,200, so that's 4,400 when you add that up. Before tax profit is 22,400. If you wanted to do it the long way around, I would take 20,200 times $8 to give me sales of 161,600, and then I would use these 18,000 at $7 is 126,000, and then I would use the 2,200 units that I need remaining to get to the 20,200 at $6, and extend that to 13,600. That gives me a cost of 139,200. Subtract that out from sales, and I get liquidated profits of 22,400. So whichever way makes sense to you, it's fine. Just be consistent, and it'll make sense. All right, let's move on to chapter 9. So we have Novella's nursery. Okay, so this is lower of cost or market. This is what this problem is. Okay, so basically, when inventory has the cost of the selling price of an item, if that slides below the cost of inventory, then we need to choose that price, and then we need to write down our inventory. Okay, so so here we have the selling price, we have the cost, and then I calculated the net realizable value. So the cost to sell are 10% of the selling price. So I took the this price, the 1960 times 90%, and that's my net realizable value. So I did that all the way down. So now here's the cost column, and here's my net realizable value. I'm just basically took these and brought them down here. And so whichever is less, those are the ones I'm going to take, and then that's the value of my inventory. So when I take the net realizable value, I need to actually write those down. Physically write them down, either to cost of goods sold, or I'm pretty sure just cost of goods sold, and then debiting inventory, crediting inventory. So for the ash tree, we're going to take the net realizable value. For the beech and the cedar, we're going to take the cost. For the fir tree, we're going to take net realizable value. And for the apple and cherry, we're going to take the cost. And then we're just going to bring that over. So our lower of cost or market should be a total inventory value of 11,834. All right, let's keep moving on. The Andover stores use an average cost retail to estimate the ending inventory. Okay, so there are like 3 problems in a row, but they ask for different things. So this one wants to know the ending inventory at retail. Okay, it's 103,000. How did I get that? And then the estimated ending inventory at cost. Okay, so we start out with cost, and we take beginning inventory of 42,000. And then net purchases, that's my cost. So I have goods available for sale of 284. Okay? And then I bring my retail cost. So my beginning inventory at retail is 79,000. And then net purchases is 421 at retail. Okay? And so this is what I paid for it, but this is what I'm trying to sell it at. Okay? So my goods available for sale is 500,000, but it actually cost me 284. So we need to know the cost to retail percentage. So we take the 284 divided by the 500,000, and we get 56.8%. Then we're going to subtract out our net sales, and that gives me ending inventory at retail of 103,000. And then at cost, I'm going to take 103,000 times 56.8% to get 58,504. All right? So we're going to do that a couple more times, just looking for different things. So I think actually this is the exact same problem, just different numbers. So in the interest of moving on, so basically, well, I'll just work it really quick just to reiterate. So I'm bringing my cost down 63,000, and 324,780 gives me total goods available for sale for 387,780. Okay, and then my retail is so we have a little extra markups and markdowns here, which we did not have in this problem. So I guess it is worth going over. So I'm bringing down my 83,000 in cost. So this is what it cost me, but this is what I hope to sell it for. And then my net purchases, which I actually paid 324,780, but at retail they're going to be 470. And then net markups, all right, is 9,000. So I add all that together, and I get 562. So goods available for sale is 562. And I'm going to take the 387,780 divided by the 562, and that gives me a cost to retail percentage of 69%. Okay? Then I'm subtract the markdown, subtract the sales, and then that's going to give me a ending inventory at retail of 142,300 times 69%, and that gets me 98,187. So 142,300 times the 69% gets me 98,187. All right. Cindy Lou Linens, try to say that fast, uses the conventional retail method to estimate the ending inventories. Again, it's the same thing, but we have to kind of work backwards now because we don't know what our net markups are. Okay, so again, we're going to go through the same process, and then I'm going to show you how I got to that number, because we don't know that number. So fill in what you do know. So you know the structure here, so you fill in what you do know. So I'm bringing in ending inventory, and I'm bringing in purchases. So my total goods available for sale is $1,957,46 at cost. Okay, and at this moment I don't really know. I only know that my inventory is $776 and my net purchases are $2. So I can bring these two down. Okay, so I got that. So those numbers I know so far. What else do I know? So markdowns. Right, I can subtract out markdowns of 48,600. I can put that there, and then normal spoilage I can put there as negative 43,600. Okay, and then to get my net sales, I'm going to take my employee discounts and my net sales and add them together to get the 2,294,000. So that's my little color coding. Okay, so that's how you know we got that. But we do know ending inventory is 828,100, and we do know that we don't really need the retail percentage, right? We do know that that's 504,300. Okay, because it gives it to us. So now we're going to start working backwards. So we know we have 828,100, and we're going to add back the 2,294,000 and the 43,600 to get us 3,165,700. And then we're going to add back the markups, the markdowns of 48,600 to get us 3,214,300. Okay. All right. So now we know everything but this number right here. So taking the 3,214,300 minus the 776 minus the 2384, and that is going to give you net markups of 54,300. So it may look intimidating, but if you just work the structure, you work up or work down, you can work through it. Okay, again, this problem is just testing your understanding of additions and subtractions and how you get to the ending numbers. Okay, so it's testing your understanding of the flow of markups, markdowns, ending inventory for merchandising. All right, couple more. Let's keep going. We're having fun. All right. So I hope there's not one on this test, but I just threw it in there because it was part of the basic problems. So the Haskell Corporation has determined its ending inventory for FIFO is $797. Okay, and so we have the selling price of $823. We have cost to sell of $41,000 and replacement cost of $771. Okay. What should be reported the value of Haskell's inventory if the company prepares financial statements according to IFRS, International Financial Reporting Standards? They use lower of cost or market or net realizable value. Okay, so we take selling minus cost is 782. So that's the net realizable value versus the cost is 797. So we take the lower of those two. So if we're reporting for IFRS, we would report 782. All right. Two more and we're done. Fad City Novels sells novel clothes that are subject to a great deal of price volatility. So, and a recent cost, so an item that cost $20.20, right, is the cost, was marked up $13, so we're going to add $13. And then it was marked down $6.60, and then had a markdown cancellation. So two wrongs make a right, two negatives make a positive. So we're going to add back $370, and you add that all together, we're going to sell it for $30.30. All right, last problem. So inventory errors can be difficult, and hopefully I will have remembered to post, made myself a note to post I have a great slide on inventory errors that would be very helpful just to have on hand during the exam. So Poppy uses a periodic inventory system, and so clearly they need a new inventory accountant because January 1st was understated by 30,100. Its ending inventory was understated by 16,100. In addition, they purchased 20,100 but recorded it for 2010. Okay, so that is just dropped a zero there. So none of these errors were discovered until the next year. Poppy's cost of goods sold for the year was understated, overstated. So the understatement of beginning inventory understates cost of goods sold, and the understatement of ending inventory overstates cost of goods sold. So basically, inventory errors will work themselves out over time, but this specifically wants to know how much it's understated. So we have the beginning inventory error of 30,100. We're going to add back the ending inventory error, so those two kind of net together, and then we're going to take the difference between the 20,000 and the 2,000, and that's 18,090. Add all that together, and our inventory is understated by $32,090. So hopefully this was helpful. Again, really encourage you to just continue to take the exam multiple times so you get exposure to all the problems, and have these formulas set up in Excel, and it should make your life a lot easier. So, all right, take care. I will see you in the next video.